Hi, my friends. My name is Daroko. Welcome to the program once again. Fidelity Bank has expressed its readiness to double the $10 million seed capital set up for the newly established National Entrepreneurship and Innovation Plan. If the bank is allowed to manage the funds, Managing Director Jim Baden made the disclosure at the launch of the Ghana SME CEO Summit and Expo in Accra. SMEs play a pivotal role in developing the private sector globally. In Ghana, SMEs constitute over 92% of operational businesses and contribute about 70% to the country's GDP. The Ghana SME CEO Summit and Expo, an initiative of Chief Executives Network Ghana Limited, is expected to bring together businesses, investors, government, and other stakeholders to deliberate on diverse issues of interest to SMEs. Ernest de Graaf Tijiri is CEO of Chief Executives Network Ghana Limited.
Most SMEs, by research, have remained at the same level for far too long. And we believe that a conscious platform has been done elsewhere before can help them begin to grow their companies. We hope to ensure that this becomes the ultimate platform and mouthpiece for SME CEOs to interface directly with government. This is where government will come to really understand the needs of the SMEs. This is where the SME CEOs themselves as peers will begin to interact, to begin to change the narrative.
A major challenge for SMEs in Ghana over the years has been working capital. As part of moves to support the entrepreneurship ecosystem, government last week launched a National Entrepreneurship and Innovation Plan with seed capital of $10 million. Speaking to Joy Business at the launch of the Ghana SME CEO Summit, Managing Director of Fidelity Bank, Jim Baden, lauded the initiative and pledged the support of his bank.
It is very laudable, the government's decision to provide seed capital of $10 million to young entrepreneurs to grow their business. We at Fidelity Bank, it is our pledge to match every dollar of that with our own money to provide the needed working capital and equity capital to all these young entrepreneurs to grow their business. Because without a doubt, the SME sector is the biggest growth sector in this country, and we've got to pay attention to it. We've got to nurture the young companies to grow to become huge companies, large local corporates and multinational corporates in future.
When you say you're ready to match up the capital, how exactly do you mean?
We mean that for every dollar of the $10 million that the government has provided as seed capital, if it was channeled to Fidelity Bank, we'll match it with equal dollar on equal risk and return basis.
The Ghana SME CEO Summit is expected to be held on the 20th of November this year under the theme Scaling Up SMEs for Inclusive Growth, the CEO and government as drivers. Now, government might have its own way in the nomination of a new managing director for ADB Bank. This is what Joy Business has picked up from persons close to Bellstar Capital, new owners of the bank. ADB, George Affe, has been following this story for us. Joins me in the studio. Before we talk about anything else, let's talk about the owners or the new owners of ADB Bellstar and how they got into the picture in the first place.
So that's a financial institution more based in US, that is Washington, D.C., and they have presence in Italy and then Spain. And they are mainly into financing infrastructure projects in emerging markets. And when ADB decided to go public and move on and list on the Ghana Stock Exchange, it looks like Bellstar was interested. They came in, they acquired some shares, they had about 24%. As time went on, ADB listed on the Ghana Stock Exchange. That stake was increased to 34.3%, and that made them the majority stakeholder compared to government about 32%.
Okay, so we're hearing that Bellstar is accepting a nomination from government. What about the individual in question?
Well, let's first talk about the nomination and what we are picking up from persons who are close to Bellstar. Their argument is that they are prepared to accept a nomination from government, even though under the current rules right now, it is the shareholders who are supposed to nominate directors, and then these directors would decide whether maybe Darrell Kwao will be the next managing director of ADB. But it looks like government is not going with that process or that agreed process. But they're arguing that, listen, they don't want to get onto a fight right now with government. What they want to do is that to do things that basically would try and bring government on board and more of a partner in this particular situation. So we don't want to do things or take on government, even though what they are doing right now might be wrong. Let's allow government to have its way, nominate the person. It doesn't mean that we won't scrutinize this person internally to see whether he has what it takes to be the MD of this bank. Don't forget that that person also has to be approved by the Bank of Ghana. But their focus right now is that if these actions are not going to affect our investment in terms of our interest in this bank, then we would allow government, because don't forget that we also need contracts from government to operate as a bank. So we don't want to get into that road where we'll start having fights with government just on a managing director, which is the thing that is just a fraction of the whole things that they are planning to do with the bank.
So when are we going to have a new board for ADB constituted?
It looks like it might take a while, because as we speak right now, this coming Wednesday, the old board that was appointed by the previous administration, they are going to meet, look at their financials for 2016, their financials for the first quarter of this year. So the names might be ready, but in terms of them taking over even before the AGM, it might take a while. Maybe during the AGM, on that day of the AGM, or even after the AGM of ADB.
And you know, we can't talk about all of this and not mention the current MD of the bank, Daniel Asiedu, how he has been reacting to all of this, what's going through his mind as this unfolds.
Well, engaging him in the first place, he was saying that, well, he hasn't had any official communication from government with respect to what is happening right now. So just like how all of us are reading these things in the media, he's also picking up the same thing. But he maintains that if shareholders don't want him there, well, he might have to move on.
All right, Georgia, we'll keep our eyes on that story as it unfolds. Now, investment analyst from Nordia Capital says the changeover and controversy surrounding it could bring about some shocks to the stock exchange, as many investors are averse to uncertainties on the capital market. Here we are talking about the ADB brouhaha.
Basically, they kind of accepted Mr. Asiedu. There's a new person on the seat. The next few weeks, that is if he does take the appointment and he comes on the seat, the next few weeks and the next signs that he will show will be critical as to whether investors would keep on looking at the stock and keep on demanding or otherwise. So a lot to rest with Dr. Mensah, a lot to rest with him. However, he's not a novice in the game. He has over 3 decades of banking experience, from Unibank to First Capital Plus, which was a savings and loans, which he was instrumental in making into a bank. So I believe that he understands that terrain. He understands moving from a savings loan to a bank can be a rough thing, but he did it and did it successfully. So there are some positives to look out for. However, ADB is a much, much bigger bank with a more complex shareholding structure. How he's able to put ideologies from shareholders together and champion the vision, and also satisfy especially the minority shareholders or the investors who bought the stock on the streets. And the ADB is a much, much bigger bank with a more complex shareholding structure. How he's able to put ideologies from shareholders together and champion the vision, and also satisfy especially the minority shareholders or the investors who bought the stock on the streets and their offices in these funds, pension funds, mutual funds, would determine whether or not the stock would do well on the market. So I believe that early days yet, let's wait for him to accept the appointment if he would, and let's see his first few steps, and let's see how it goes.
I believe it's early days yet, but can we also, project in terms of the shocks, possible shocks in the stock market in the wake of him coming over?
If the policy direction is so adverse, it was so different from what investors saw and purchased, then it might take all of us as analysts back to the drawing board to see if we believe in a new direction. And if we do believe in a new direction, we would of course continue to demand the stocks, because we are in the business of making money as investors, and so we'll continue to demand the stock. Nonetheless, yes, potentially there could be shocks. It could go bad if what we see in the next few weeks, that's if he does take the appointment, is very different from expectations, and we don't believe in the direction that he will be taking. That is very different from what Mr. Asiedu is already taken. So it still will lie with him, whether there will be shocks or not. I mean, it will rest on Dr. Mensah so he mainly is the determining factor.
Well, on his part, the head of research of Databank, Alex Boyne, is upbeat the coming in of rich banking experience of Dr. Kofi Mensah when brought in as new head of ADB will help transform the fortunes of the bank.
For me, I'm cautious about picking sectors at the moment because we have very few choices on the market. The oil marketing sector, even though the sector is quite fragmented, but the two listed companies are expected to do well, in particular GOIL. The banking sector recovery has just started in terms of stock market performance. So, and also we are also seeing some strong performances from Farm Milk, which is also one of the leading consumer companies or consumer goods companies in Ghana. So the performance going forward, from our point of view, will be broad-based. You have to consider the track records of the person that is coming on board. And as I mentioned earlier, Mr. Mensah is probably one of the finest bankers that we have in the country. So it will be interesting to see how he leverages his experience in the banking industry for the benefit of ADB. For the past couple of years, the bank has been embarking on aggressive branch network expansion. So these are some aspects of the business that I expect Mr. Mensah to continue.
Well, away from that, the National Council of the Association of Rural Banks is asking government to immediately review the 25% corporate tax on its members. The council says the effect of this would not be felt only in their inability to offer more employment, but result in a drastic cut in their corporate social responsibilities. Initially, rural banks were paying 8% corporate tax to government, but this was increased to 25% by the previous government. The representative on the National Council of the Association of Rural Banks, Stephen Safo Kantanka, says this is too much for them.
Initially, we were paying 8% corporate tax, but quite recently, since last year, the previous government changed our corporate rates, and then we are now paying 25%. In fact, this is affecting the rural banks greatly. Because
what does this mean?
It means that whatever profit that we make, we have to divide profit, we divide it by 4, and 25% will have to go into the government chest. And that is part of the tax we have to pay to the government. And this is actually a big problem for the rural banks because the profit that we make, we're able to plow back not only for corporate social responsibility, we also use it to build a capital gradually. Because when we have bigger capital, that is where we'll be able to help the rural communities. So we are appealing to the government that this is a very big hit. In fact, I would describe it as an astronomical increase. It's an astronomical increase.
Safo Kantanka tells Joy Business, though they are not in any way opposed to this astronomical increase, they'll be better off if payment is targeted.
We are not against the increase in the tax, but at least it should be increased gradually. If, for instance, from 8%, it could go to about 15%, we will not argue about it. But from 8% to 25%, it's going to be a big blow to most of the rural banks.
So the government can stagger, is that what?
They can stagger. The government can stagger. And we are not against increase. We know things are moving up, and we are good corporate citizens. We are not asking for a tax-free zone. What we are asking for is that the tax should be increased gradually, so that if from 8 we go to 15, after some time they can also increase it. But they should also look at the help that we are giving to the community.
In other news tonight, the country would not witness any power crisis despite the planned Jubilee oil field shutdown for almost 3 months from September. That's a firm assurance coming from Deputy Energy Minister Dr. Mohamed Amin Adam. There are fears the country could get into serious power crisis from the last quarter of the year. This is due to delays in reaching an agreement for gas exports from the 10 oil fields and fears the government may not have the required funds to import crude for power generation. Consumers should be assured that things are under control. Meanwhile, Dr. Amin Adam tells Joy Business the Energy Ministry is doing everything possible on its part to ensure Ghanaians continue to benefit from Ghana's oil industry.
I went to the FPS or JECO accompanying His Excellency the President, and I was thrilled to learn that up to 56% of all the personnel on the FPSO are Ghanaians, 56%. Those days when you had less than 10%, I'm talking about the first Jubilee project, to about 56% of the over 200 people who are on the FPSO. I don't think the records do not support the fact that we have made significant progress when it comes to local content implementation and enforcement. And so, as far as I am concerned, yes, a lot has been done, but we need to do more. And this is why our president has a vision to position Ghanaians to participate more effectively than they have done in the past in the oil and gas industry. And so his manifesto promise to launch and implement the accelerated oil capacity development program is on course. It will not be long. His Excellency the President will launch this program. This will target a number of technical institutions in Ghana that will be supported with the equipment, with the laboratories, with trained teachers who are technically sound, and in partnership with other technical institutes from other parts of the world to train the Ghanaian youth in their numbers, not just to work in Ghana, because the oil and gas industry is a global industry, so that we can equally export, skilled manpower for them to work in the oil industries of other countries. But this program is also to support Ghanaian SMEs so that they have not just the technical capacity, but also are able to source the necessary financial support. I'm sure you know that the Local Content Development Fund has been set up for the fund. The fund has started receiving money, and this will be used to support the president's agenda of providing research incentives, technology incentives, but also financial incentives for local Ghanaian companies that want that support to be able to work in the industry. And so, yes, we have done so much, but we need to do more. And this is why we are determined under the accelerated oil development, capacity development program to push the frontiers of capacity building in Ghana to position Ghanaians to take over the industry eventually.
All right, so you are watching Business Live. Time to do some analysis of the stock market. In fact, the first half of the year. We want to play for you an interview with Asea Kotia of Nordia Capital.
To interact with the Chief Operating Officer in the person of Asea Kotia in regards to issues, pertaining to the Ghanaian economy, specifically the stock market over the past 6 months and the way forward in terms of his perspectives and his projections as well. Many thanks, sir, for your time here on Marketplace. First of all, the year has, run very fast. We've passed 6 months already, and there's been various developments in the stock market, especially, and as well the economy as well. Your review of the performance of the stock markets and the economy as a whole over the past 6 months.
Okay, the stock market has been quite impressive this year, coming from back-to-back negative returns. That's last year, last 2 years. Already we've gone past the 20% year-to-date mark, and that's not even annualized, that's a year-to-date. That is very impressive as compared to the rival money market instruments averaging 12, 13%. And even that, we're talking about annualized yields. So we have a good capital market, and when your capital market is booming, it shows that your private sector, which is representative on the capital market, is also doing well. So I think we've had a good 6 months so far, and we're optimistic even of a better 6 months to come.
Speaking about the positive sides, what do you think accounted for, these advantages?
I think largely on the yields on money market instruments, taking a nosedive. Usually we have a reverse relationship. So when you have money market instruments that are supposed to be less risky, taking this kind of trend, right from the end of last year, I think November or so, you saw the yields coming down, and in the teens now. We've been in the teens for some time now, and you have investors who want to take a bit more risk by looking at the capital market. However, the capital market instruments, the listed equities, would have to make a case for themselves before you have consistent demand in there, largely also stabilizing the electricity problem, I believe, has had a very major effect on bottom lines of most of these companies, especially the manufacturing stocks and even the banking stocks. Most of their businesses is hinged on a lot of power, a lot of electricity. So when you have that stable, it helps. Also, I think we have seen that we have had some major tax reviews. That's read in the budget state, the 2017 budget statement, and anybody who wants to invest in a company that knows that whatever tax they're going to be paying is going to be reduced, which means that you have prospects of bigger bottom lines. That is what will be beneficial to you and I as investors. We tend to demand more because it's a good avenue for us to exit some surplus funds. So this, amongst many others, I believe has helped to propel what we're seeing on the market.
Looking into the crystal ball over the next, six months, I believe we've already started the seventh month already. What should investors be looking out for?
I think the capital market will continue as it started the year. By all indications, we're expecting the yields on money market instruments to come down. Inflation has come down, even to 12.1. That's only on June last week. And the prime rate has consistently come down as well, 22.5. We're expecting that the next review, which will be soon, we'll see it even coming down further. And when you have these indicators taking this nosedive, you expect that the premium that is paid on money market instruments will not be as much as it was when you have them on the heightened, level. And so if this continues, which I expect it to, money market instruments, the winner in this case, I believe, will still be the capital market. So yes, we still have the stocks that are going to be driving the economy for the next 6 months. So the capital
analysis of the first half of the year on the stock market. That leads us to interview of the day, and you should know by now that EcoBank was adjudged the Bank of the Year at the 2016 Ghana Banking Awards held over the weekend. Now we have this interview with the Executive Director, Morgan Asiedu, who is excited that his bank has won that award.
Interview of the day.
I mean, this is an award that I think endorses what we have been doing over the years. We try to give the customer what he wants. We also believe in giving back to society. So for us, winning in the category of best in corporate social responsibility and best in financial performance, and then going on to win the ultimate, I think it endorses what we've been doing all along. We just want to make banking accessible, and I think that the continuous support that the public shows in us, it's vindication of what we are doing, and I think it also assures us that we are doing something right. So winning this is just the icing on the cake, and we are quite happy.
So what is next for the bank? I mean, over the years, you've again shown it that you are the bank, the biggest bank, strong financial performance, strong CSR. Does it tell us that you should be doing more CSR as well and also working on your financials?
Yes, I think that's what we are doing, and we'll continue to do just that. As the leaders in the market, I think a lot that was said today, talked about financial inclusion, the digital agenda, which is what we are doing. We are very strong in product innovation, and I believe that we will continue to find out just what will make the customer happy. So yes, we are the bank, and we are not going to rest on our OS, because they say an easy lies ahead that wears the crown, and we are very much aware of this. So we'll continue to give the public what it was. For now, I think that digital is the way forward, and all the products that we are coming up with is, I believe, positioning us to continue to perform as we are doing.
Finally, what is next for EcoBank?
Well, for EcoBank, we depend on God, we depend on our people. We believe that, so long as we keep giving glory to God and we keep giving our customers and our people, our staff, what makes them tick, I believe that will continue to, soar, and the sky is the limit.
Interview of the day.
And that's our program tonight. My name is Darryl Kwal. Thanks for watching. We are back same time tomorrow.